We're going to keep our eye on the protests and the fallout from George Floyd. But the market and stocks, as you've said, are focused on economic activity, period.
Yeah, I mean, we just keep getting some good news here. And it's good news off of very lowered expectations, whether it be Cheesecake getting a lot more people than people thought, or whether it be the airlines this morning, American saying some good things, whether it be eBay pre-announcing right now that things are better than expected, whether you take a look at a lot of the companies, a note out of Morgan Stanley that GM, of course, this quarter was the weakest, but maybe next quarter will be the strongest. We have a number of oil recommendations saying this, they've come all the way back. So the street is really bullish after being very bearish. You see a lot of price targets that were cut severely are now going back up. It's a kind of don't fight the trend. We're the most overbought we've been since 2009. But if you go back to 2009, we were up 11 on the OSCE or I follow S&P. We had a great period after. So people are fighting the tape if they're selling. How about that? That's what they're doing. They're fighting the tape. David, you see it. You saw it yesterday with your excellent Warner Music interview. There's an IPO that people made a fortune on.
Yeah, that stock up dramatically, over 19% as the day wore along. It only got better, Jim. At the same time, as my day goes along and I have conversations with people who advise corporations, what I continue to hear is companies planning for layoffs or planning to make permanent some of the furloughs that have taken place. I mean, Jim, I just can't get past what I sort of pick up during the course of the day and how the S&P is performing and whether or not we're going to have an unemployment rate that is higher than people perhaps seem to expect, at least judging and reflecting from what the S&P is right now, or how these two things coexist. And I keep coming to you with the same question. And I don't know, because then the answer you get from all the investors you talk to as well is just about the Fed. That's it. It's just got to just be about the Fed.
Look,
it's just about cheap money. There's nowhere else to go. Blah, blah, the usual.
We have to break things down. I mean, this morning, for instance, Royal Caribbean, good company. They just raised $2 billion at 5% money. Now, that Royal Caribbean doesn't even cruise. But before the Fed got involved, you would say that Royal Caribbean should be in Chapter 11. Chapter 11, you have 5% convert. That is Jay Powell. I mean, anybody who's in business who is a larger cap company can get money. And they can get money at relatively good prices. And we know that's Powell. When I see what Europe's doing, we say, OK, they're doing their own Malcolm X by any means necessary plan. But it is so hard to fight the fact that any company can raise money. And that we've only had Hertz be, and that was, of course, a little self-inflicted, in what may be a Great Depression, too, in terms of employment, only Hertz has had to file Chapter 11. I don't even know whether they end up being Chapter. I mean, they actually may be back in business by now. So it's an amazing time. Carl, I've got to tell you, if you didn't know any better, you would think that happy days are around the corner. And yet Dave is absolutely right. I think everyone at these major banks is trying to figure out how few people they need to bring back if they ever come back.